We officially have liftoff. Hunter SpaceX has IPO'd. We're recording this on Friday. It just started trading and shares have ignited. I'm not going to stick to these puns for too much, but the stock's up 20-25% right now off that 135 IPO price, and it's huge for the industry. Everyone's been talking about it, retail, institutional, and so I figured it'd be great today to do a podcast on SpaceX, its IPOs, and some of the other exciting IPOs that are coming up.
Yeah, IPO season is definitely in full swing. We have SpaceX today IPOing at a roughly $2 trillion value. So that's a huge market cap, the largest IPO ever so far. And that will be followed by a couple more in the $1 trillion+ range. It's not too long ago that we were calling billion-dollar private companies unicorns. And now we have $1 trillion private companies. It's kind of incredible.
That's right. Pretty soon, probably as soon as this fall, we're going to have OpenAI and Anthropic IPOing. Like you said, around $1 trillion valuation. So just between those three companies we just mentioned, about $4 trillion in market cap. Pretty incredible, fairly unprecedented. The other interesting piece is you have a lot of companies issuing more equity as well. We're going to get into that. But Hunter, let's kind of start off with SpaceX. I mean, I don't think the world has ever seen an IPO with more interest, more demand. I don't know if we've ever really gotten much inbound interest in an IPO more so than SpaceX. I mean, we had so many clients asking us about it, and we've had a lot of conversations around it. Kind of give us some of the details, and we'll kind of start from there.
Yeah, well, to your point, Victor, huge amount of interest, both retail and institutional level. It was several times oversubscribed, meaning the amount of shares available to purchase at IPO. You had 4+ times as many orders for those shares. So many retail clients put in, call it 10 shares and only received 1 share, or even on the institutional side, put in orders of hundreds of shares and only received a partial allocation to that. And I mean, as far as dollar numbers go, there's no comparison, but just broad interest level, this attracted so many different people from all over, even with Elon Musk making the retail amount of shares available larger than normal. So retail got a outsized percentage of what they normally get. Usually most IPO shares go to institutions and stuff, but in like larger players in the space, banks, stuff like that, Elon went out of his way to make sure that retail clients got, a bigger opportunity here. And still we have reports of many of those people getting maybe 1 share.
Yeah, it's pretty incredible. And I think what we're getting at here too is it's not like all $2 trillion of this company started trading day one. This day one trading, the IPO shares represent only about 4%. That's 4% of the entire company, about $75 billion cash raise at IPO, which is fairly minuscule. I mean, it's a tiny piece of the company. We have companies like Google, which we'll talk about in a minute. They're doing an add-on equity issuance. Of course, Google's been trading for a long time. They're doing an add-on equity issuance of $80 billion, which is more than that $75 billion of SpaceX. So very small number of shares in the grand scheme of things for such a large company and so much demand. So what happens in economics, this is back to economics 101, supply and demand, when you have a very small number of shares, huge demand. Well, how do we rectify that? Price has to go up, and that's kind of what we're seeing today already.
Yeah, and one thing I will mention is that the investment banks who were running this deal had an option to add on shares to that and raise that $75 billion equity issuance to closer to $85 billion. So you might see that number floating around there too. But regardless, to your point, Google had an equity raise just add on of the same size. And I feel like the SpaceX IPO is getting all of the news attention. Meanwhile, Google's is just as impactful to just overall market liquidity from an ability for markets to absorb all of this additional issuance.
Yeah, absolutely. And I definitely want to talk about that coming up. First, we mentioned the retail interest, we mentioned institutional interest, in SpaceX. Now, I think one of the most interesting things about this company is because it is so big, because its name is so popular, you even have a lot of the ETF issuers, you have some of the index issuers making exceptions to get them into their indices. And of course, the ETFs follow a lot of indices. One of the most popular ones, which is where SpaceX is trading, is on the NASDAQ. Now, the NASDAQ, they run their index, the NASDAQ 100 of essentially the 100 biggest tech names that are out in the space, and they traditionally have rules that govern which publicly traded companies are allowed to be in that index. Well, they waived some of those rules in order to get SpaceX in. And I think part of that was in order to ensure that SpaceX would be trading on their exchange rather than just because they wanted it in the index. So maybe a little bit of, inside baseball there. But I think it's very interesting that because of the interest in getting something like SpaceX into the indices, it's creating a massive amount of ETF interest. Because as I mentioned, a lot of ETFs, follow things like the NASDAQ or even single stock ETFs that are trying to get exposure to SpaceX. They're going to have to buy those shares in order to provide that representation in their ETFs. So you're seeing a lot of demand for that, especially in these early days.
Yeah, and I think that's a very important piece that maybe isn't talked about as much as it should be, is that out of this, call it an $85 billion cash raise, you have forced buying by other ETFs who track the NASDAQ, track the Russell. It's going to be forced buying so they can get included as the index calls for, to the tune of $14 to $19 billion over the next 15 days. And so this is well before any insider lockup periods. And so talking about, insiders who maybe work at SpaceX were granted, stock through the company. They have lockup periods, generally 90 to 180 days after IPO. So they aren't able to sell their shares quite yet. And just in this short interim period of 15 days, you have $14 to $19 billion of forced buying going on. And to the point earlier about it not being a huge float, that's a large percentage that needs to be absorbed. And the question is what price does it take to incentivize people who have IPO shares to part with those?
Yeah, that's going to be a lot of retail investors and also institutional investors that are going to have to make a business decision there and decide, hey, at what price am I willing to fork over these shares that I maybe just acquired? Maybe I just got in right at the IPO, 135 a share. What price am I willing to give those up? Is it, up 20 to 25% like we're seeing today? Is it up another 10, 15, 20, 25%? It's going to be interesting to see. And I think that kind of leads us into what our expectations are for trading, in the early kind of medium, long-term range. There's not a whole lot of basis for valuation yet because we haven't seen what a true trading range looks like on SpaceX. We haven't seen them report yet. Of course, we have financial information from the S1 that they filed, but there's a lot that has to shake out in the market first. And so full disclosure, some of our clients at Beck Capital Management do own SpaceX shares, and we're not going to really provide a thesis of whether you should or shouldn't buy SpaceX, especially at this point. But I hope we can kind of talk through what our expectations are for early trading and, as far as these supply and demand dynamics that are going to drive the stock far more than fundamentals and valuation are.
Yeah, absolutely. And, I think to talk kind of through our expectations, just again, from a very agnostic view, is over the next few days is that huge amount of buying pressure that's coming in today from retail institutional that didn't get the allocations of the IPO shares that they wanted. So, additional dollars flowing in to procure those, the forced buying by ETFs, the discretionary buying by, maybe it's replication strategies, maybe it's semi-active investors who still kind of try and keep broad exposure to the indexes and make their calls from there. There's a lot of, additional buying that we expect to go on over the next few days, especially today, day one. And then over time, as those insider shares become available, I think we're going to see, to your point, that kind of trading range really flush itself out, see what the real equilibrium price is, because, like you said, we don't have a whole lot of either financial information or historical trading data. We have no historical trading data to go off of to kind of form a realistic basis here. And this is a pre-earnings company. They have lots of revenue, but they also are spending lots of money. And so you don't have your traditional, PE, your price to equity ratios. You don't have, price to earnings ratios, excuse me. You don't have a lot of those ratios that require positive earnings upon which to base, kind of a price target, if you will.
Right. And so I think it's going to take a few reports before we really see investors kind of wrap their minds around evaluation. But so much of SpaceX, the promise is the future technology it's going to deliver. And I think it's going to be very similar to what we've seen with Tesla. If you were just to value Tesla as a car company, it's far overvalued compared to its competitors. But I think it's the promise of future technology is why people own the stock and continue to buy it. I think it's going to be similar for SpaceX. So the valuation story, which we'll I'm sure have a follow-up podcast on, a few months down the road, that'll be interesting. But I don't know how much it's really going to play into as far as, a lot of times you and I are looking at stocks from a fundamental basis. It'll be interesting to see really how much the fundamentals actually play into SpaceX versus how is the technology progressing. But kind of getting back to the buying and selling dynamics, I think these first 15 days of trading, you're going to see a lot of the ETF demand, especially with the NASDAQ 100 entry, after a 15-day waiting period, because like I mentioned earlier, they had to waive some of the rules or shift some of the rules, which traditionally a company must be publicly traded for at least 3 months before it can be entered into the NASDAQ 100. They moved that to a 15-day period with expectation that SpaceX will enter the NASDAQ 100 after 15 days. That means that all of that tack on ETF purchasing to trace and to track the NASDAQ 100 index must happen after those 15 days. So we think those first 15 days, you see a lot of retail interest. You're going to see a lot of institutional as far as the ETFs are concerned. And it's probably going to bid the price up. Now, what's interesting is you mentioned some of the insiders. I think that's going to be where you have the interesting piece of it, because right now, a lot of the insiders, those being some of the private equity firms, those being a lot of the employees at the company, their shares are still locked up. So they don't have the opportunity to sell them into the market. Well, as soon as those 3, 6, 12-month lockup periods expire, a lot of those funds and individuals are going to look to diversify their holdings. First, and I'll let you talk about the individuals, but first, just talking about private equity firms, they're investing in private equity. Whenever their companies go public, it's typically to provide an exit for that investment. They may have been in SpaceX for 1, 3, 5+ years, and they're waiting for that exit for their investors. So they're more than likely going to sell those shares as soon as they're out of their lockup period, which means supply going to market. Someone is going to have to soak that up. And then on the other part of that, you have the insiders as well.
Yeah, and so you have all of these predominantly SpaceX employees, either current or former employees that still hold insider shares that have become millionaires, and even a few of them billionaires off of what was a piece
one
of their,
trillionaire as well,
and one trillionaire. And so you have all these people whose lives are changed forever based on this. You have engineers and even talk of cafeteria workers who are now millionaires. Who that's life-changing money to people who may have been making a decent salary, but nowhere to the tune of tens or hundreds of millions of dollars before. And so once that's locked up, I would expect many of them to sell that position down, maybe not sell it all because, you still have affinity for the company, but and hope for future growth. But still, you're talking life-changing money. Sell that down, diversify that into other areas to hedge against any kind of single company risk. And so once you see that, kind of similar to the PE funds, but maybe not quite as quickly, you'll see people slowly trade out those shares. In this whole combination between PE and individuals is how you get the float from 4% to maybe 40% of the company. And it can start trading on a lot more, stable of a basis.
Yeah, and so I think that kind of leads us into what are we watching? It's, when those insider redemptions kind of hit the market, I think that's going to be very interesting as far as how much supply is really coming online, how many shares are insiders selling into the open market, because that's when we're going to get a true feel for what a longer term trading range is going to look like. Also, we need earnings to kind of establish some kind of valuation basis, some kind of fundamental basis for the company, at least to judge off of, because it's going to be all technical. It's going to be all the supply and demand in the early days. But I think after 6-12 months, that's when you start talking about fundamentals again. And now, before kind of moving on to, we mentioned OpenAI and Anthropic and the other equity issuance, I want to mention, all the time we work with individuals who have concentrated stock positions, who are looking for strategies. Maybe you picked up, SpaceX IPO shares. Maybe you were an insider and looking for, strategies, opportunities, ways to divest or, make the most out of what you have. Feel free to give us a call. That's what we do all the time. That's what we get excited about. With that being said, let's move on to OpenAI and Anthropic quickly and talk about the broader IPO and equity issuance universe and wave that's coming towards us.
So OpenAI and Anthropic both recently filed confidentially to IPO, with Anthropic beating OpenAI by just about a week. And so, kind of going back to what we were talking about earlier with the market's ability to soak up all the issuance between SpaceX and Google, other hyperscalers, and also these new IPOs, it's really important for these companies to be first to the table, because that's when people still have appetite, still have, fresh, dry powder to deploy into these things. And so that's why it's a big win for Anthropic to sneak in there just barely before OpenAI did.
Yeah, and it's going to be really interesting. I mean, these two companies are so similar. I mean, they are competing frontier AI software models. So it is really going to be about who can get their IPO shares listed first. And, just because they confidentially filed already doesn't mean that one's going to beat out the other yet as far as when the shares actually hit the market. So it's going to be interesting to see how much they push those investment banks to push the process along to get them ready to file. And it's going to be fascinating. Now, we don't know yet how many shares will be floating, aka what's the dollar value of shares that's going to hit the market for the equity raise. We mentioned SpaceX, that was at 75 to 85 billion. These we don't know yet, so it's going to be interesting to see how much in terms of equity supply do we have that the market has to soak up. But I think that kind of leads us into, we're seeing a lot of equity issuance just in general between IPOs. We just mentioned, $4 trillion in company IPOs, granted smaller portions of that actually floating in the shares, but also Google, Oracle, and potentially Meta issuing new equity. And that's all stock that whether it's institutions or retail buyers have to soak up that supply. It kind of begs the question, is the market going to be able to handle this? Is there a risk there? Hunter, what are you thinking about that?
Well, there's a lot to unpack with that little question, but I think part of that is asking the question, do we think they're issuing more equity because they think equity prices are too high, or are they issuing more equity because the opportunity is so good that their return on investment is so high that it makes sense to deploy more raise more funds so they can deploy that into all of these growth areas, particularly AI, and kind of be at the bleeding edge of all of this? I think that's the big question that we need to be asking.
I'm so glad that you mentioned that, because I think it's different for each company here too. Google, I would say, is probably a combination of the two, because one, their equity price performance has been better than a lot of the other hyperscalers. But also these companies are trying to balance, balance their balance sheet, if you will. I mean, they're trying to make sure that funding comes from the right combination of current cash flow, equity, and debt. And as far as Google's concerned, I think they want to preserve their credit rating. I think last I checked, they're AA plus, which is very high quality debt, which means they can issue at very low interest rates. By issuing equity instead of debt, it helps preserve that. It makes bondholders happy. Oracle, I think, especially for that reason, their shares have not performed nearly as well as someone like Google, and they want to make the bondholders happy. Debt holders of Oracle have not been super enthusiastic. They don't want to see further deterioration in that credit rating. And so they're issuing equity. And it actually led to a rally in Oracle bonds the other day because debt holders were happy to see, hey, you're not just issuing more debt. And then to answer your question about on the other side of that coin is, are they feeling like the opportunity is there? I think absolutely. I mean, I don't think they would be doing this if they didn't see the opportunity in building out this data center infrastructure and continuing to invest in their AI capabilities. That's got to be number one. That's a business decision that every company has to make. Do I invest more in my business or do I return more to my shareholders? Well, they're deciding, hey, the future cash flows warrant this investment, so I'm going to do that right now. And ideally, hopefully, it is in the shareholders' best interest to do that.
And I think that leads us into a very interesting, pivot here is that this is why it's so important to us to be invested in single stocks and not just the entire market, everything all the time, because companies are doing this for different reasons and from positions of strength or positions of weakness, and being able to pick which ones you're exposed to is so important now more than it has been in the previous years, as we've talked about before on this podcast. That's kind of goes back to show the point that we've been making for years now, in that being invested in individual companies and being able to pick those exposures is so important.
Right. No, I completely agree. And it does get me kind of back to the question is the market capable of absorbing these IPOs, of this equity issuance from these AI companies? And I think generally, yes. You've seen some market commentators kind of make a little bit of a fuss about this. But like we mentioned, SpaceX was not really that big of an equity issuance, 75, 85 billion. Google's around 80 billion. Oracle's going to be a little bit less than that. We don't know on the OpenAI and Anthropic piece yet. But, I also want to look at something that we mentioned earlier, is that the insiders who own, especially these IPO companies, whenever they sell their equity, they're likely to look to reinvest in other areas of the market, diversify their portfolios. So what may be pressure on those individual stocks in the market could be a boost to the rest of the S&P 500, to the rest of the NASDAQ, to some of these AI companies. So I think at the end of the day, a lot of this is going to balance itself out, and the supply demand dynamics aren't going to have market moving implications. I don't think the S&P is going to be dramatically impacted by the fact that you have this equity issuance coming forward. It's something important to watch, but I certainly think given the dynamics of those insiders, as well as the surging corporate buybacks that continue to be very strong, I think it's going to balance out some of that equity issuance.
Yeah, earnings have been strong, continue to be strong, and I think that it provides a really good backstop for all of this going on. And I think to your point is the availability of diversification of those funds, where you may have some Anthropic employees buying OpenAI shares because you can be really convinced that these large language models are the future, but you might not have the same level of conviction that, this one particular company is going to be the one. You can diversify that across a few different providers. Even in SpaceX, we saw that now that xAI sits under SpaceX, that's part of this IPO, they're continuing to spend tons and tons of money on data centers. And that's part of why we have no gap earnings to speak of, is because they're pouring so much money into the development of rockets and these data centers that, there are so many players in this field, and having that ability for investors like us, but also insiders to be able to diversify that away. Because to Victor's point earlier about those insiders having life-changing money and the importance of diversifying it away, diversifying it, throughout the economy, other sectors as well, but also even within, call it AI broadly, is that many of these people, it's not just their livelihood, it's their job, it's their savings, it's everything all tied to potentially one company. And that's what I'd point at as the importance of diversification, is because, you can believe in it with all your heart, but you still have everything financially tied to one specific company.
Yeah. I mean, I couldn't have said it better myself. I think diversification is key. Diversification in the right areas of the market is even more important. And so that I think that kind of brings us to a pretty good close. Let us know in the comments. Do you think SpaceX is going to continue to lift off? Is it going to the moon, or is it coming back to Earth? I guess we'll have to wait and see.
Thanks, Victor.